It's Friday, June 4th. This is The Street Live. I'm Catherine Ross, and I am joined by Kenny Polcari, managing partner at Case Capital Advisors. Jim Cramer, of course, is off today. So, Kenny, let's dig into the markets, and then I want to get to the jobs report. But first, what are your thoughts here?
You can see the markets rallying today, right? On the back of that not so hot but not so cold jobs report. So I think that's okay. It's signaling certainly that what investors are thinking right now is that, maybe that taper conversation is in fact not happening in the June Fed meeting, and that's causing markets to rally. Certainly what we're seeing is the NASDAQ names, which got really crushed yesterday, and the tech disruptor names have been getting crushed. That's rallying the strongest today with that index up over 1%, while the broader market's up a little bit less. But, I'm kind of digesting it like everybody else, trying to really understand, does this really mean that we're not going to have that conversation in June? Does it really mean that the Fed's not going to hint that they're talking about it? Because look, there's a split right down the middle of the Fed, right? You got half of them saying it's time to start talking. You get the other half saying, no, we're not there yet, which I think is a strategy as they try to test the waters, right? It's like they float the balloon to see what kind of reaction investors will have based on who's talking. Are they talking about tapering? Watch the market. Talking about not tapering? Watch the market to see where they kind of take the temperature. And I think they'll continue doing that, right? And it's a way that they jawbone the markets. They get the market ready for what's coming. And I think that's what we're going to continue to see. So I feel okay with the market. I don't think the market's going to sell off with any volatility anytime soon. I would like to personally see it come in a little bit, just because as a long-term investor, I want to put more money to work. So I was hoping that this morning was going to actually be a stronger number and force the markets a little bit lower, so I could put some money to work. But I'm going to be patient. I'm going to wait now until probably the 15th.
Well, what you just said, it kind of sparks this interesting discussion to be had about how the market is reacting to the jobs report, right? And it's all due to inflation. We see a bad number come in, or a mediocre, as we saw this month, come in, and suddenly the market's rallying. But you get a really good number, and suddenly investors are like, whoa, inflation, that's a concern, and we see the market go down. So it's kind of like a topsy-turvy response than we normally see.
Well, it is, but you see, then you have to start to now think about, they're floating this idea of the good witch and the bad witch, right? So it's good inflation and bad inflation. And so today's report showed that wages are actually rising. And so if you get rising wages and rising prices, that speaks to a robust recovery, a better economy. And so if you get inflation in that sense, that's the good witch. That's Glinda, the witch of the north, right? Because you're getting rising wages as well. If you get rising prices but stagnant wages, then that's the bad inflation, right? That's the wicked witch of the west. And so today's report, I'm assuming, based on the way the market's reacting, is that they saw wages were up. They saw the job market not that hot. People do understand that prices are there is pressure on prices, but that story lends itself to that recovery where it's going to be the good inflation environment where it's going to benefit. A rising tide will lift all boats and not just leave some people out. I'm assuming today that's kind of the reaction. But look, the reaction today is not so strong that you're going to say everyone's completely convinced. So I still think we're very much in this trading range in the S&P, and I think that's kind of where we're going to stay, at least until Jay Powell comes out on Wednesday the 16th with his announcement after the Fed.
So you did say you're waiting for the 15th to kind of see where this market lies. I'm curious though. Let's kind of look into a crystal ball here, Kenny, because if we do have the Fed sitting down and they speak to both the good witch and the bad witch, and they decide perhaps, maybe we're going in the bad witch direction, and they discuss tapering in a more serious sense. What do you think how could the market react to that?
So I think that's a great question. So here's what's going to happen. If the Fed gives the sense that inflation is actually spinning out of control and it's not as transitory as they say, then I think that's a much more swift and violent reaction. Because I think there have been plenty of people out there saying, we don't believe it's transitory, yet the Fed has done nothing except say, no, we're in control, it is. So people are willing to give them the benefit of the doubt. But if they suddenly come out and say, maybe not so much. Maybe we're concerned. Then I think you're going to see a more violent reaction. I think the market will adjust as it should, because all it is doing is adjusting on risk, right? The valuations are stretched based on what we currently think, but suddenly if you change the inputs into the equation, then the result has to change. And so I think that's what you'll get, more violent reaction. If you get the Fed coming out and saying, okay, we're going to start hinting about talking, which is kind of what the story that they're trying to tell, I think the market's okay with that. I think the market will take that more in stride. That doesn't mean the market won't back off. I actually hope it does. I want to see the market back off in any case, because I want to put more money to work as a long-term investor, right? So I'm hoping that they can talk the market down a little bit, right? That's what I hope. If you're a day trader, if you're somebody who's just in and out whipping it around, doesn't make a difference. You just want volatility so you can day trade. But as a focused long-term investor, I'd like to see them talk the market off a little bit.
So there are some focused long-term investors in AMC, Kenny, and this morning they got a little bit of a dip that you want for the general market. But we are seeing the AMC bounce back. It's about nearly 3%, $52 a share. I mean, this week it's really been interesting because AMC really took FinTwit at least by storm. And you see kind of like half of the people on FinTwit are like, I'm tired of talking about the meme stocks, and half of them are like, I'm so excited about it. And this leads me to wonder about investing behavior and whether or not this is a new kind of investing behavior.
Well, okay, but I will say to you, unless I misunderstood what you said, I just still don't believe that this action we're seeing in AMC are long-term investors at all. Look, this happened on, I don't know, what day was it? Monday, when it was up 96%, or Tuesday, whatever day it was. There's 498 million shares outstanding of AMC. That's the total float. It traded 700 million shares, almost at 140% of its outstanding float. That is not long-term investors. Those are people whipping it around. Those are day traders. Those are people in and out, in and out, in and out. So I don't consider them long-term investors at all, right? Now, that doesn't mean I'm not saying they shouldn't exist or they're bad or all that stuff. I'm not in that camp. You want to trade, go ahead and trade. But that action and what you're seeing in AMC or these other meme stocks, to me, is not long-term investing at all. IBM's got 900 million shares outstanding, and the thing trades at 2 million shares a day. Because it's not a meme stock, but B, it's really not a trading stock. It's an investment stock, right? AMC, and I don't even know what the volume is today, but it's caught up in that hysteria right now. And again, I'm not saying anyone who's trading it is bad. I don't care. I'm not in it. I won't trade it just because it doesn't fall in my purview of names that I'd traded, especially when you get the Reddit chat rooms creating the hysteria. We're in. The stock is up 10%, it's down 30%, it's up 20%, it's down. That's not my space. So therefore, I'm watching it and I'm entertained at what's going on. But AMC would not be a stock that I own.
Okay, so let's just talk about this for these investors, because if you talk to the Reddit crowd, if you talk to what they call themselves apes, which are the long-term holders, they're the ones that truly believe in this stock. They say they're long-term investors because they want it to go to the moon. I mean, that's the whole diamond hands kind of thing.
Okay, I want all my holdings to go to the moon. I mean, to say that they go, oh, we're holding because we want it to go to the moon. Okay, that's great. But if that's your investment philosophy, then you really need to go back and go to school and take Finance 101. Because it's like you go out, you buy a lottery ticket because you want to win the lottery. I want to win the friggin' lottery too, but guess what? Right? Not happening. So all I'm saying is that it's fine if they call themselves, it's funny because, again, somebody tweeted at me the other day and used that word ape, and I had no idea what that was. I wrote the guy back. I said, listen, can you talk in English so I understand what it is you're trying to tell me? Because he was talking in this code. I had no idea that ape meant that. I had no idea until you just told me. But one way or the other, if you're a long-term investor, if these apes, as they call themselves, are long-term investors, that's great. Then stay with the plan. But my sense is, based on the way the stock acts, is that the people in the Reddit room are not long-term investors at all. I just don't. I don't buy it. Again, I'm not saying they're bad. What I'm saying is they're whipping it around and they talk to each other and they create the buy hysteria, the sell hysteria, the buy hysteria, sell hysteria. So I don't know what else to tell you. I mean, if you're a long-term investor, then you should be looking at other names, is what I would say.
Well, Kenny, I think that this whole conversation kind of leads to my broader question here, which is looking at this kind of behavior. We've never seen investors come into the market in this way. Like you said, with this kind of hysteria around the stock, but also with the social media push. And also, I guess I could argue like these shorter attention spans that we're seeing because of things like Twitter and TikTok, et cetera. So I'm just wondering if you think that we're going to start seeing. We've seen this new class of investor. Don't get me wrong. They're here. They're going to stay for as long as they want to. But the behavior, do you think that we could see investing behavior change over time because of this?
No, because no, I don't think you're going to see investor behavior change. And the fact is, I love the fact that this younger generation is getting involved in the market. I think that's great. That's a positive. But what I think they'll learn over time is that you can't make every stock trade the way that they're, you can't do this to IBM. You can't do this to ExxonMobil. You can't do this to, big multinational names. You just can't. And so in this case, AMC, got caught up in that whole meme trade, got caught up in the recovery trade. I get all that. But I think that, I'll trade on technicals and I'll trade on fundamentals. Right now, the fundamental valuation of AMC makes no sense to me at all, which is why I'm just sitting here watching it. And you know what? There are people making a ton of money. Good for you. Pat yourself on the back. But there's also people losing a ton of money trading these stocks. And those are the ones you don't hear from because they're not going to get up on Twitter and LinkedIn and go, oh, look at me. I just lost $5,000 or I just lost $100,000. But you're certainly going to get the guy that said, oh, wow, I whipped it around and I made 50 grand. Good for you. But you're not going to get it from the people that are losing. And there are plenty of people that are certainly losing for sure. There's no doubt about it. Right?
No, I agree with you. I do think that you do get, just to interrupt you for a second, Kenny, you do get these investors talking. It's called loss porn, and it's on Reddit, and it's on Discord too.
It's called loss porn? Is that what it's called? Oh my God, I'm getting too old for this stuff.
You talk about your losses with the community. So there is a bit of a community aspect here that, I mean, you could say it doesn't really matter if it's good or bad. There's a community aspect that's at work here.
Okay, but you see, again, you just told me something I didn't know. What I'm telling you, that's fine if they're talking about it in a chat room, their losses and they're nursing their wounds. That's actually probably healthy because, that's how you learn, right? You learn when you're a trader like this, you learn by your losses, right? But what I'm saying is, what I don't see is, I see all the winners are the ones that are screaming and yelling and posting and making all the noise on Twitter and LinkedIn. I don't see the losers screaming and yelling, go, oh, look, I just lost $100,000. That's what I'm not seeing. Now, if it's happening in a chat room, okay, so it's happening. And I actually think, like I said, that's probably a positive because they need to vent it out. They need to understand, what did I do wrong? Why did I lose $100,000? What should I have done differently? Somebody help me. And that's perfect. That's great. I'm happy to teach. So tell somebody to call me. I'm happy to talk to them.
Kenny, let me see if I can get your passion with this next subject too, because I want to bring up SPACs, which are also, there we go, we're already starting. So I want to put this in context. Bill Ackman's Pershing Square Tontine Holdings is in talks to buy 10% of Universal Music Group for about $4 billion. Now, let's not talk about the specific deal, Kenny, because I think that we've seen SPACs fall out of favor with the larger investor base. So I'm wondering if an investor is looking to do due diligence on SPACs at this point, I mean, what's your advice for them?
Well, again, it's not a space I'd play in because you just hit the nail on the head, right? But in this latest news that came out, he's buying part of a company that's out there. It's not a big, sexy unicorn name or fintech name, which is what a lot of these SPACs were designed for, is to bring out these companies that, these unicorn companies. UMG has been around for a long time. I mean, there's nothing sexy and exciting about UMG. So quite honestly, I think that's kind of a boring response. I think it's a boring pick, but that's what he picked. And if the buyers of his SPAC like that idea, they'll stick with it. But I think you have to, the thing about SPACs is when it comes public, there's only assumptions about what the target is or who the target could potentially be. And so it's difficult to it's difficult to do due diligence because you don't really know which way it's going. You might have a sense what industry it's in. You might have a sense of, all that other stuff. But until it actually happens, you don't really know, right? And so it's difficult to do in my mind because I don't play in the space, so I'm not doing any due diligence on any of the SPACs at all. But what I think is interesting is that people that get caught up in the SPACs because of who it is. So you got Bill Ackman. Everyone goes, oh, what Chamath Palihapitiya? Oh, right. Look at look at Chamath Palihapitiya's SPACs. They're all down. They're getting crushed. So so much for the SPACs. I think if people need to play, people are trying to. Whose dog? Is that your dog?
I think I apologize. He's having a nightmare on the bed right now. I can't get him to quiet down.
Does he hear me screaming? Is that why he's having a nightmare on the bed?
He's dead asleep. I wish I could show you guys. He's dead asleep right now. He's laying down and he's just, I guess it's some kind of.
He's having a nightmare. Oh, the poor thing. But listen,
I will after the show.
I think the SPAC craze is all these people. It was like the hottest thing. Look, there was a time there, February, March, we were getting 5 or 6 of them a week. Almost a day, it seemed, right? Because it had gotten so hot. And everyone thought it was going to be the next get rich quick scheme. And what's it turned out to be? Honestly, I think it's turned out to be boring. I think it's been a disaster. There's so many other places you can put your money, but that speaks to what your drive is, what's your perspective, what's your intention, what are you trying to build? Are you trying to build a long-term investment portfolio, or are you just trying to hit the next big, you're trying to hit the next big winner. So you're going to try to pick a SPAC and be the next winner. I think that's the wrong way to invest. I'm not saying, look, if you like SPACs, have them be a percentage of your portfolio, but I wouldn't be overweight them at all. Look, I'm underweight them because they're 0 in my portfolio, right? So I don't have them at all.
So I think that Kronk and my puppy and his sleeping stage heard about the next topic that I wanted to bring to you, Kenny, because I actually wanted to bring up Elon Musk tweeting out memes about Bitcoin and Doge last night. Oh, I love the sigh. I'm really getting the reactions from you today, Kenny.
Well, but go ahead.
I wanted to see if you're interested in this space at all in crypto.
I am interested in the space. And in fact, I own Bitcoin and I own Ethereum, right? I am in the space because I do think that blockchain is absolutely going to be part of the future. It's certainly going to change the world. It's already starting to change the world we live in. It will continue to change the world. And so therefore you need some exposure to it. Now, that being said, Elon Musk, is this cult-like experience that people just they sit on the edge waiting for him to say something so that they can react. Me, I don't really care. It makes no difference to me what Elon Musk says or doesn't say. Now, look, people are saying, "Oh, Bitcoin's down today because he did that ridiculous tweet with the broken heart and the man and the woman on the couch, clearly not hugging and loving each other, but separating, right? So what is it, a secret message? Is he trying to tell people that he's no longer in Bitcoin? That's baloney, really. First of all, it's baloney if he does it that way, right? Because remember when he went in, he made it, all hands down, he made this big announcement, how he's in, he supports it. Tesla bought $2 billion. He made a big announcement. And now he's cryptic with these Twitter messages and people respond. I think that's baloney. Now, that being said, I'm in the space. Do I know where Bitcoin's going tomorrow? I absolutely don't. But what I will do is I'll look at it on a chart, like I do everything that I trade, everything that I invest in. I look at it on a chart. Bitcoin, and I'll say this, Bitcoin appears to be making a head and shoulders chart pattern. Now, pay attention to this because we've got the left shoulder, we've got the head, look at it on the chart, and now it appears as if it's making the right shoulder. The trend line or the level that you have to keep your eyes on, which is the neckline right now is at 30,000. Exactly where it went when it broke down a week and a half ago, that day that it went from 42 to 30,000 in 6 hours. It traded right down to 30 and it bounced and it made its way back. But you have to look at it again. 30,000 is the number you really have to watch for if you're wondering what to do next. Between 30 right now, it's trading at 36,000, down a couple of grand, down 5% or whatever. But keep your eyes on 30,000 because if it tests 30,000 and fails, then the chart suggests the next stop is really 20,000, which would mean down another 30%. 10,000 is another 30%, right? So that's what I would be worried about. Now, does that mean I'm panicking? No, not at all. Because I'm watching it, and if it breaks 30,000 and starts to collapse, guess what? I am going to buy more, right? Because I believe in it long term. I'm not day trading it. I'm not whipping it around. I'm just buying it to accumulate it. Because the other thing that's going to happen is that these people that are whipping it around and buying and accumulating it, it's all well and good until the IRS comes knocking on their door and saying, okay, let me see what you did in Bitcoin and how much do you owe the IRS? Because that's where these people are going to go, oh, I forgot about that. That's going to be the problem. But for me, do I like the space? I do. Am I overweight the space? Absolutely not. Is it, it's 3.5% between Bitcoin and Ethereum is 3.5% of my portfolio. So therefore, if it crashes and burns, is it going to take me down? No. If it rallies, am I going to participate? Yes. So I've done exactly what a long-term investor should do, right? You should never put all your eggs in one basket. You should never overlook. Now, listen, I know you're going to get some guy on here that bought Bitcoin, at $10,000 and sold it at 60 and made $20 billion. And he's going to get up and he's going to say, look what I did. And you know what? I'll say, good for you. I didn't do that. I didn't have the guts to do that. I wasn't going to do that. But good for you. I can't do anything but congratulate the guy. But if you're talking about Joe Q Public, Joe average, retail investor that wants to play in the space, if you're asking me, I think those are the two places you should be playing, Bitcoin and Ethereum. Doggy coin is baloney, right? And yes, people have made money in doggy coin, of course, because they bought it at a penny and they sold it at 20 cents. That's a massive percentage move. Right. So if you put $10,000 in at a penny and you sold it at 20 cents, you made a lot of money. No doubt about it. But as easily as it went to 20 cents, it can go right back to a penny. That's my issue with doggy coin. I don't think that's so much going to happen with Ethereum or Bitcoin. I just don't. That's just my gut feel. But I am watching intently the chart on Bitcoin because I think that will tell a lot. Now, if it comes down to 30,000 and it holds, then that'll be another bullish sign because then it'll have completed the pattern, yet it didn't break, and that'll be a bullish sign.
Well, and I do. Well, you might actually, now that I'm thinking about it, you might get a chance to buy Bitcoin before you get a chance to buy in the markets if we're waiting until the 15th to see a real market move.
You're absolutely right. Bitcoin could be trading. Listen, it's down $2,000 today. It could be down 30. It could be down break through 30,000. But if it breaks through 30,000, I'm not buying it right at 29,000 because I just said to you the chart suggests it will go down to 20. So then I'm going to watch it, right?
Yes. Right. And I do want to also add, because we were talking about Tesla and Elon Musk, as far as we know, there have been no documents filed to show that Tesla has sold any more of their position in Bitcoin. So they do currently hold, which is another discussion that we will have another time about why Elon Musk's tweeting is interesting for Bitcoin at this moment. But with Kenny.
Right. But just let me say one more thing. Tesla may not have sold any, but Elon Musk has his own personal portfolio that includes Bitcoin, and he's not obligated to publish whether he buys it or sells it in his personal portfolio. He might have to on behalf of Tesla. But the other thing that people need to understand is, look, Lonnie Musk has got zero to lose in this game. He's got how many billions? I don't even know how many billions, but even if he loses everything he has in Bitcoin, it's a pimple on his backside. He's got nothing to lose. Unlike Joe Q Public, these people, they go all in. And then when it crashes and they lose everything, they go, oh, my God. Just understand that people like Musk and Chamath Palihapitiya and Mike Novogratz, they got nothing really, they got skin in the game, but it's not going to kill them if that should go to zero. And I don't think it's going to zero anyway, but just understand that, right?
It's losing maybe an hours of sleep instead of losing your shirt, really.
Exactly. That's what I'm saying. So you have to understand who you're listening to and who you're paying attention to. And look, Lonnie Musk, good guy. I don't know the guy. Clearly he's a good guy, but there's this cult-like following. And I think if you're a lot like, I just eliminate his noise. I don't react to what he says. I don't, I might be entertained and I might laugh and I might say, there he is again. I might, but I'm not making a decision to buy or sell Bitcoin based on what the cryptic messages that Lonnie Musk puts on Twitter all over the place. And then everybody talks about. That's the worst thing too, is that the media actually gives it attention, which only feeds that mania. The media should just ignore it and then watch how fast it stops. Right?
You know what? You do have a point there, and that's a conversation that, again, you just keep bringing up these conversation points, and I'm gonna get yelled at because we're gonna go so long that my producer's gonna be in my ear like, "Come on, guys, wrap it up." But that is another conversation that we will save for another time. Kenny, this has been such a fun Friday show. Thank you so much for joining us today.
You're very welcome. You call me anytime you want. I'm happy to do this with you.
There we go.
Excited? Did I get too excited?
Oh no, I like you brought the excitement. I try to match it. I hope that I did, and I hope that our investors watching enjoyed this show as much as we did. So thank you for tuning in this week, guys. Jim Cramer will be back next week. I'm Catherine Ross, and we'll see you on Monday.